Hi, it's David here with Futures Trading. Want to go ahead and do this video again for you again because the one I uploaded this morning, for some reason, the volume was not there. And I'm just now noticing this. I do apologize for any of you that have watched the video from this morning with the ES. I'm going to leave you something real special for having watched it. All right. So I'm going to make sure that I give you another range just for having taken the time to watch the video. I'm going to give you another range just for having done that. And again, this is something that's simple. It's nothing complicated, but I'm add a range time for you. All right. So let me do that. And we're going to cover the next 17 minutes before the video actually ends. So let me give you that range time. All right. And then I'll have it down here probably next time. But I'm going to go ahead and give you the range time that you're going to want to look for. And this should help out just a bit. So let's go with let's go with 10. Let's go with 10. Let's go 10:45. 10:45 to 11:10. So we're going to go 10:45, 11:10. This is AM Eastern Standard. So if you're watching this on any other time frame, well, any other time zone, this is what you'll be looking for. All right. So this is the time. I'm gonna just kind of blow this up just a bit, just make it a little bit bigger. All right. So we're gonna be looking at that time frame for the information. Now I'm going to go here in my indicator list, and I'm gonna go get that actual I'm gonna go get that. I can't do it right here in frame. Hold on, give me 1 second, because there's other times that I have as well. I'm gonna give you just one of them. This is one of them. Now this one helps with market reversals sometimes when price kind of run away from these ranges. This will help you with that. Um, you can kind of see right here, and we'll touch on that price pattern. You can kind of see right here, they formed that range, kind of broke out of it, and now they're coming back in it using it for resistance. They fell outside the range here. It caught that turn back up. All right, so it caught the turn back up. They kind of got up at the top, drove back down outside of the overnight range, and I'll scroll through it just a bit. I'll even take the time to show it to you on the NQ. And I'm gonna show it to you on. I'll show it to you on the NQ as well. I'll do that, and I'll show it to you on Gold. So I'll let you see it from a different couple vantage points. But we're gonna cover that price pattern really quickly here. As you can see, we ran away from the ranges here. That's that 10:45 of 11:10 here. We dropped right up under it, used the means right here, ran up, and then we fell down. And then here's the gap on Sunday. So they gapped away from that range, kind of held above it all night long there, came back to the top of it here. And I'm not going to officially release this. So this is just for you having, if you watched the video this morning and you did not hear the sound, this is for you. I want to give you something else. All right. So I want to make good on your time, because I don't like to have wasted your time. So they came down to that range, the overnight range, kind of all of that met. Here's the bottom. Again, this is meant to help you catch reversals. All right. So now let's look at it on the NQ real quick, and then we're going to dive into just a little bit of price patterns before it ends. So here's that range again. It's cyan range. You can see we caught the bottom of that. Again, we outside of the overnight ranges here. I told you I know many more time frames. I do that can get you the same kind of response. I know several of them. All right. So here's that time window here. They bang up against back and forth. Okay, now you're in midair. Remember, these are the two that I gave to the public. This is another one I'm gonna give to you right here. So that's another range there. This the NQ. All right. So we fell away from these. Here's that other range here. And we kind of got trapped in between the two, used it for support, didn't get back outside the bottom, use that for support, use that for support, and begin to move up. All right. So now gold, I'm gonna shoot through gold real quickly here. And then we're going to have to look at that ES before it's all said and done. All right, so there's the range that they form right below that, and you can tell they play in the backside and they're running down. This is gold. Here's it on gold here, up outside of these ranges. That's why I say once they run away from these, if the public don't know, hey, there's a there's another time window they can turn from, and in all actuality, there's at least this is three. There's three more that I know, at least three more that I know that can catch some of these turns. All right, so and if you can figure it out, have at it. But here we go. This is a time window here, and it's roughly about just 25 minutes. All right. So here, but it's when they do it that's really really important. All right. So they play it outside the bottom, and so here you have it here. Usually it catches the reversal. Now, sometimes, it can be the reversal or pull back and they'll stall you out and then they'll take off running and then kind of hold you steady. But most of the time, it's meant to try to catch that top or that bottom after they, completed a run away from these ranges. All right. So here it is right here. Played the backside. kind of drove down. All right, so that's that. Now let me get back to the ES because this is supposed to be all about the ES here. Unfortunately, I was I don't know what happened with that sound this morning, but we can go back and take a look. We can go back and take a look. All right, so this morning I shot the video. It was about 9:30. I want to say 9:30, 34, 35. It was somewhere in there. We were right in this area here. All right, right in this area here, and you can tell I tried to explain it the best I could to you. These are three different ways. Well, it's kind of like four different ways the market will respond if it's climbing. You can get it where they'll drive all the way back. You know, the NQ do a lot of this. And then, of course, you got this, okay, where they pull back slightly and then they go. And then, of course, you got the one on the incline here, and then they'll go. This one is dangerous because sometimes they'll go just a little bit and then slam you. And then, of course, you got the base, the stair step one. All right. So, just a little bit more information for you because they were stalling out this morning so bad, and I wanted to give you some real information while they were moving, but they just didn't want to go anywhere. But needless to say, they had set this price here because of that. There wasn't a bar here, but it was like a price line. So that price line didn't touch that mid, so they set the no touch and the hard stop on this bar here. And then, of course, they kicked the stop, which they normally do sometimes when you have activity like that, kind of, came back under that price and then just held that price level for about, I don't know, you can see about 7, 8 minutes, just held that price level. That's the no close price level. Then they came back with these two dojis here, all in that video. It was happening in real time. I do apologize for that. No close back above here, hard stop here, and you can tell they kind of hit that and then drove down. And then I told you if you have any indicator, well, not indicator, but any strategy or even sometimes indicators, they're operating based on of course momentum. So oftentimes this is a momentum based strategy. So well, a momentum price action method. So what's going to happen is whatever winning trade you're in, this will be a part of it. So, and that's why it's universal. So now let's take a look at it right now before the next 10 minutes before this time run out. And again, my apologies to you. If you do not know this price action method, it works like this, and I'll explain it to you. Here's a candle here. Here's a candle here. Okay. And then you have this one here. We do not care about the color. That's not really the concern. All right. It's all about what it does. All right. So the no close. Now, this is if you're going up, this one if you're going down. No close under this bar here. Okay. And a hard stop here. No close back above this bar here. Hard stop here. All right. Now, when I say we don't care about the color, it's this. Like, you see how this bar is green, but the outside is red? That's because this high of this bar isn't touching that mid. And so I don't care about the color, it's what it's doing. Price is essentially breaking out to this side strong enough that the mid of this candle, and that's what we're doing. We're gauging the performance of the candle, measuring it against the prior pivot. If the break is strong enough to pull that mid, this is what makes this significant. If the break is strong enough to pull that mid away, that's a pretty strong run. Because most of the time you're going to get overlap with candles. It's a very high percentage that they'll reach back into the candle. So when you get this type of movement, okay, really, really important when you understand this. When you get this type of movement where they push that candle's mid so far away from the high of this candle, is really, really important. I know a lot of people are chasing this concept right now, and it's not to say it's not favorable. I just know it's late. All right, so if you get 3 bars this way and then you get this little gap in between, you're late. You're a whole nother bar late. Where with this, if you can see the performance of this candle as it jumps up and down, if you see that mid push, just like now, you see the mid pushing away from this low, that's potentially that move to go down. So you don't have to wait till there's a third candle way down here, wait for price to pull all the way up and then try to go back that way. What you're trying to do is, and again, it's no bad light on anybody's information. All right. What you want to do is go ahead and get in the trade, hard stop here, no close back above here. All right. And then go ahead and take the trade back down. All right. It's really, really important that you get that. So let's see if they can do that. We have the no close level here. They're not closing under it. That's not fun. So we need them to close under here. Okay. And then the hard stop would be here. All right. So hard stop would be here. No close under this level here. All right. So let's see if that can all play out. Let's see. Let's see. Let's see. I'm sorry. The hard stop is here. I wonder why that line won't there and that bar won't green. So I'm sorry because they had a print right here, just no candle. So you got an NC and It's kind of like that scenario I just showed you. We got the price, the hard stop here and the NC. So both of them is here. They're not closing under this level, but they kicked that stop. All right. So they kicked that stop. So they're doing the same thing. I thought it was okay because I didn't see the bar green. I was like, why the bar is not green with the level? All right. So that's all it is. It's all on this bar here because of this is, I guess, no print. It's just a price, that they set at. And then of course this candle just kind of went from that. So that's the information here. Now let's see if they can remain below this price level of what is this high here? 90. Let's see if they can stay beneath 90. We got roughly we got about 7 more minutes here. Here's the clock and here's the time. All right. So, and again, this is a range for you. All right. So this is a range and it's really, really simple. Here's really, really simple here. Nothing complicated. I'll teach you. This is just another range that I know, just another range. All right. So, and it's the cyan one down here. All right, we combed through 3 different markets. You can rewind the video, take a look at that. And again, go take a look at your charts. Again, I don't lean so heavy on this. This is just another time window. I know 6 of them. So this is 2 that I made available for the public that often set the tone for the whole day. And that's why I gave these to the public. All right. Now let's see what they do. Let's see what they do. But that's a range you can have if you watched the video earlier and you wasn't able to hear the sound. I do apologize. I do not want to waste your time. My time is very, very valuable to me, and I don't want to waste yours. All right, really, really important that we understand each other on that level. I'm not a educator that'll waste your time. I'm not a YouTube personality that'll waste your time. I'm a simple guy presenting some simple information to try to make sure that your trading goes the way that you need it to go. Because if you're trading, I would suspect that you need a financial change in some regard. I'm not saying that everybody's trading is in a financial strait or something like they're having a hard time, but most people that trade they do want some kind of influx in their capital. So if you need your time, the time to trade, you need the trading to go in your favor. So I'm here to try to help you get that done. All right, simple stuff. All right. So let's see if this, okay, so they want to come back this way. They just set that same scenario here to get back up. All right. Now, we got the same thing from below. We got the same thing. Now, remember, this is the up one. All right. No close back beneath here. That's the NC here. Hard stop here. Kind of got it from below. They haven't closed above here, but they're pulling up on that stop. Remember, you got to do the trend too. All right. So if they're going to, let's look at it like this. If they're going to stay down, you got to make the trend and then go with the trend. But if they're going to go up, we're going to go like this. You can kick this, all right? You can kick this area here, get up under here, okay? But just don't break this information here. That's important. Don't break this, all right? If you're going to go up, well, if we're going to stay with this uptrend, you can kick this area right here as a two-leg removal, all right? So that's this, that. All right. So all one and the same because this just dove down to the back of that. So all one and the same. You can kick this, just don't kick this area here. All right. So now let's see if they can get back up past this information here. Let's see. Here's some information that they're telling you, as well as this right here. They're telling you something that hey, we're moving lower. We ain't going back up just yet. So we definitely got more than what we need for a trend. If you're not familiar with what the trend is, that information will be below the video. All right. Yeah, even the market structure, what I just went over right here, that's going to be below the video. If you want the ranges, except the one I just showed you, if you want this range and the other range, that will be in the link in the description below. I will make sure I have the information down there. Click that playlist and go ahead and grab as much information as you can. Pretty much all the videos I put in that list is all together is about 2 hours. So you can just press play it all the way through, and in 2 hours you'll get the foundation of how to trade. But this is the universal price action method right here. So this particular price action method, okay, I can assure you will carry you far enough just by itself. All right, just by itself. Now, if you put the other information together with it, you can probably get it to go further. That's really important that you know that. So if you combine this information with the market structure, of course the trend, you can probably get the trade to go a lot further in your direction, and you won't have to get out based on how many bars just went in your favor. Because normally the market moves and of course in like a synchronization type process. It goes through this whole 3 5, it kind of moves a couple bars and then they come back. It synchronizes itself with other time frames and it's fluid, and that's all it is. It's fluidity. It just keeps going up and down. But It's a certain way it prints, all right, and that's all it is. It just goes up and down, and so the ebbs and flows of it, you want to try to time it. And so if you definitely learn the trend, you learn the fractal side of it with the two leg removal. Oftentimes, you'll be able to get this price pattern to give you a little bit more without having to get out. Okay, you can deal with the ups and downs, kind of know, hey, it shouldn't get past here, and then it should go. And then also, if you know, and here's the thing, if you know there's a certain distance that it don't supposed to go past, you can start looking and saying, hey, do I have my NC? Do I have my colored bar over there? Do I have what I need? Now, of course, you don't have this indicator, but you can still know that, hey, is that particular price pattern located somewhere in that particular area to say that, hey, this needs to turn around right about here. And so it helps reduce the risk. All right. So now this video again is for the playlist. All right, so this is for the playlist here. Is for this playlist, the universal price action method. If you're watching this anywhere else, you can come here and find this video. I plan on making a series of them. We already did Bitcoin. We did the NQ on yesterday. I actually included some stocks and some oils and metals in this one because NQ wasn't really setting up like I needed to. And so I came back this morning and I covered the metals, the oils, the forex pairs, and that stock. Okay, I covered all of that this morning in about 10 minutes. Gave you what had actually happened based on what I said here. So if you want to get brought up to speed based on those things, you can come over here and watch this. It's roughly about halfway in it. You can hit, go halfway in it. You'll probably see what I said, and then come back and look at the charts, and it literally unfolded just like I said this price action method should do. And it doesn't matter what you're looking at. It doesn't matter whether it's stocks, forex. It doesn't matter. Futures. I'm a futures trader. I like trading futures. So, but it can apply to anything. No sooner you pull up the chart, you should be able to see it and readily identify it very, very quickly. All right. So, and that's why I don't want to hold these videos really long. I'm trying to make them shorter, honestly. So, all right, so they held the back of this no close bar here, this green one here. They don't suppose to close beneath it. You can tell for the few minutes that they did it with the back and forth. I know it's 1 o'clock, so we're getting ready to get off here. You can tell with the back and forth, they held it. They held it here, okay, pushed down, but then they held it here, and then you had your push up. All right, so I just wish you all the best with your trading. Again, do forgive me for uploading that video and you could not see it. All right. So that's really, really important that you're able to see that. All right. So I'm going to get you this video right now. And again, please forgive me for that. That's my apology. I had no idea that sound wasn't there. Again, I thank you for taking the time to watch, and I will be covering gold. So on tomorrow, we're going to take a look at gold in real time, and we're going to utilize some of the information that's already available to us. Again, with the trend, with the market structure, the ranges, we're going to take a look at all of that. All right. So I blew this up for you so you can see it. All right. You can kind of tell with the overnight with the blue and the gray. And there we go with that cyan one to kind of help bring everything into focus. And again, I appreciate you taking the time to watch. So I wish you all the best with your trading. Take care.